News, the credit rating agency Standard & Poor's has decided to downgrade America's credit rating, America's AAA credit rating. They've downgraded it, fallout from the debt crisis. Alan Chernoff is in New York joining us. Alan, how unexpected is this?
Anderson, this is not shocking at all. It is shocking from a public relations standpoint, but S&P actually had warned of this back on July 14th when they said there was a better than 50% chance they were going to do this, and they've pulled the trigger. Wasn't easy for them, but they've done it. What they're saying here is that the deal struck this week to avoid default, to raise the debt ceiling and cut spending simply isn't sufficient. It's not enough to stabilize the debt situation of the United States, as they term it, as S&P terms it, the medium-term debt dynamics of the U.S. They want to see more spending, and they're also saying they're making a judgment here on the politics that occurred in Washington this past week. The disarray, the fighting, the fact that it took until the very last minute almost for them to come to a deal. And they're saying we just don't believe that the Congress and the administration will be able to leverage their agreement into a broader fiscal consolidation policy. So they're just giving a thumbs down to what's occurred over the past week in Washington. Down one notch to AA+.
And Alan, it is bad news, but it could have been worse in terms of levels of downgrade. This is just, as you say, one notch.
It's one notch, but they're saying within 2 years they may go down another notch if they don't see enough spending cuts, if they don't see enough fiscal consolidation in Washington. So they're giving a warning that we may not be done with this. So it's really quite a step.
Is their biggest concern long-term debt?
Yeah, they're worried about just this debt overhang for the United States, absolutely, as a percentage of GDP, of gross domestic product. They're saying, look, you know, the economy is fairly uncertain. What if the economy shrinks and our debt load increases, puts the United States in even a more tenuous situation?
What sort of an impact will people at home, will consumers feel from this?
Well, it's certainly possible that some interest rates could rise from this. Really, the more likely impact is that we could have more pressure on the stock market come Monday morning. We've already had a horrific week, but this certainly is a blow to the United States without question. In terms of the Treasury market, right, that's where it really should hit, because that, after all, is how the United States borrows money. We issue bonds, notes, short-term bills to investors. They give the United States their money. The United States says, we'll pay you back with interest. So will people run away from those? Well, unlikely. The full faith and credit of the United States still means quite a bit, and indeed, some other major nations have seen their credit rating cut, and it didn't have all that much impact on those countries, including Japan.